Good morning, traders, and all you beautiful people. Today is Monday, April 11th, and we are going to discuss the current Bitcoin price action. All right, the big question is, will the 0.618 Fib retracement level hold? We do need confirmation on the daily to prove whether that's going to hold or break. Let's jump into our charts here. I'll show you what we're looking at. So the big thing here, I know this is a noisy chart. I apologize for that. Let me do something here real quick so you can see what we're looking at. All right, I've drawn our Fib retracement from wick low to wick high. All right, I'm going to darken that up so you can see what we're looking at. A drawback typically will go to either the 50% retracement level or the 0.618. In this case today, our candle is testing and has broken that 0.618. However, what do I always say, guys? That we need to prove that that 0.618 is not going to hold. We need confirmation on the daily, correct? Because we are swing traders, so by and large, our overall analysis goes by the daily charts. All right. Now, as a swing trader, you can use the 4-hour to find good areas of entry and to get a jump start on potential pattern that may be breaking up or down. In this case, we're analyzing for the week of April 11th. And should any of my analysis change between now and Friday, of course, you guys know or are accustomed to the fact that I will bring another update if things change. All right, so what has happened here is the price action has broken below our 0.618 Fib level. All right, so previously we had an intersection of the 50-day coming up, the 100-day moving down with that 50% retracement level. That whole area of confluence was strong enough to keep the bears at bay. All right. Now, since that time, the 50% or the 50-day moving average has come up, has separated itself from the 100-day moving average, which is still trending down. Because of that separation, the bears were able to divide and conquer, so to speak, and tackle one of those major moving averages at a time. And they did that successfully. That intersection occurred right at 0.618 Fib retracement. I'm very impressed by the strength of the bears at this point. I'm not quite sure what's causing all of the bearish price action at this point. I think it might have a combination of variables, something to do with the Fed, something to do with people finally realize they have to extract their profits to pay the tax man. Taxes are due April 18th, so we're at maybe have one final flush here while people gather those profits to pay off Uncle Sam. It could be any of those. I don't know. I'm not good at speculating. I'm just good at looking at the charts. All right, so really what we have here is Bitcoin came down to the 41,000 level and bounced off of that a little bit this morning. All right. So what we are looking at, what I am anticipating and hoping, I guess, I shouldn't say expecting, because as I said in last Monday's video, when we were up here, I said Bitcoin likes to throw us a curveball every now and then. So the last 8 or 9 videos, I had only done a video on Monday and Friday. What does that mean? That means that everything had gone for that week exactly as I had anticipated, expected, predicted, according to the charts and technical analysis. And I was not expecting here this big old red candle. All right. But since we did get it, I was very happy to see that, because to me, a strong bearish action like that deserves a strong bullish reaction at some point in the future. So for us to get down to that 50% retracement level, which is a patent technical drawback, I was happy to see that. And now the bears have even gone further, tackled the 50-day, the 100-day, and the 0.618 fib retracement level, and have brought us all the way down to this 41,000 level of support. Very impressive. Now, when do I start to become concerned with this drawback, right? That's the question. Well, as I've always stated, to tackle an area, a significant area of support, which I consider to be the 0.618 fib retracement level, we need to close this candle on the daily below our 0.618 fib retracement level. That's that middle black line I drew over. We need to open another candle and close it. That was a crooked line. Let me see if I can do that again. And close it below our level. All right. So tomorrow, which is Tuesday, April 12th, we would need to see another candle open and close below this fib retracement level, which is, if you're taking notes, approximately $41,700, around there. I said 737 or 738, I believe, in the last video. 41,700 is good enough. All right. So we would need to open another candle tomorrow and close it below. And really, I don't start getting concerned until we have 3 days of price action below a significant level of resistance. So let's say Wednesday we opened another candle below this 6.18, 41,700, but we closed it above. All right. I'm good with that. We're back on track. I'm not going to bring you a midweek update. If that does not happen on Wednesday or Wednesday afternoon, I will bring a midweek update. And you all know that midweek updates are only given if price action does not follow as anticipated. So I'm not going to start getting concerned unless by Wednesday afternoon it does not look like that candle is going to close above the 0.618 fib retracement. So for me, and I'm holding all altcoin positions which follow the big dog. So a lot of you have been freaking out because your altcoins are going down rapidly. You're afraid you're going to lose all your profits, all your gains. All right. The time to start being concerned is if you see me bring a midweek update. All right. And look for that video. Then you know, oh, Stu's starting to get concerned, or I don't know if concerned is the word. Yeah, concerned. Precautions. I think we just need to take appropriate precautions here. We don't let emotions rule your response, but think rationally, logically, look carefully at all the data that's being presented to you. I've said this before, what I don't want to see is for us to come down and test this black ascending trend line anymore. It's been tested enough, guys. All right. So I've drawn this out all the way back since October of 2019. All right. So wow, what is that? That's all. This is 2.5 years. It has acted as resistance. You can see once we broke above it, we shot up, telling us that the market significantly respects this line. Came back down and tested it just a day or two in mid-July. And then when we had this big red candle, which I stated might be the cause might be could be the U.S. and China selling their massive wallets, came down, and it actually brought us below this black ascending trend line for just a moment. We could not confirm that move below. You can see one body candle close below, another one open, then we close back above it. So there was no confirmation that a move below was going to occur. And then since that time, since January, we have hit this level and tested it at least a dozen times. So would I be concerned if we hit that let me get the zoom level right here. If we hit that again, yes, absolutely. I don't want to see us test this again. This is trouble, guys. If we test this a black ascending trend line one more time, again, I've stated this over and over, but I just want you all to know what I think of this. It's like a jackhammer hitting hard cement, and we have cracked this line enough times that if we hit it anymore, it could break, and then we would go even further. All right, so I don't want to see that. What I want to see is by Wednesday afternoon, us closing above 41,700. All right, enough said on that. Let's dive through our indexes and see what's happening. I haven't looked at any of these charts yet. Look at this, guys. The dollar still strong. Man, eight green candles in a row. At some point that will break, and again, I've stated this previously, we're going to come back down and test that overhead previous resistance, now support, before maybe proceeding further up. But that will give the bulls a break. All right, that dollar coming down, did I say that right? Yes. The dollar coming down indicates weakness in the dollar, which is inflationary pressure. That inflationary pressure can be factored in as a variable to our indexes and to crypto. All right. VIX is up. All right. So we have, even though that's a red candle, we're up almost 8% today. Looks like we're going after this 100-day moving average. All right. So when the dollar is up and the VIX is up, everything else is going to be down except for gold and silver. Gold and silver is another indicator I like to use to measure fear. All right, because this is where people go when they are uncertain. And both gold and silver, even though those are red candles, those are higher today. And Dow is up just slightly, just above this level of support, which is sort of surprising because the dollar is up and the VIX is up. However, the dollar is only up by minuscule amounts, so that makes sense here. And SPY is forming a red candle doji. NASDAQ is down. QQQ is way down. Here's our candle. And that all spills over into our total market cap, which is down. Again, our total market cap is right here at this area of confluence. And I bet if I drew Fibonacci from this wick low, I would draw it to the wick high. We would see the same thing. Let's just do that real quick. Yep, so look at that. The wick of this candle here is hitting our 0.618. Very interesting. All right, this all follows patent technical analysis. And that's why today I don't appear to be concerned, and I am not. Oh, by the way, some of you guys probably didn't see I shaved my beard. Didn't see from the last video. I'm saying, obviously, can see that I have shaved my beard for the summertime. I'll grow it back. It's tradition for me. I grow it back in the fall, winter, and then shave it in the summer. I know it looks like I've gained 15 years, but I promise you I'm the same age here. All right, and we have Bitcoin dominance. Looks like Bitcoin is going to come up and try to touch that 200-day moving average. All right, and then who knows? If it comes up and touches this 200-day moving average, guys, then at that point, could try to tackle that and come back into this area. I don't really know. I don't really have too many opinions on this right now. It's like I said, it did something here. Now, this was all what I expected. I drew that months ago. What I didn't expect is instead of touching this upper resistance and coming back down, didn't even try to tackle that. It didn't even head up there. Instead, it just broke our trend line, came down, and we have actually gone to a level to our target, and now maybe we're going to trend back up. And then, of course, we end up with Bitcoin. All right, so this is what it is, guys. Enough said about Bitcoin. Let's jump to our concluding chart. Look for Bitcoin to reverse its downward direction by Wednesday, as I've said. And if this does not happen, we need to take appropriate precautions. And I will bring another update at that time. So until then, guys, I wish you the best. Just keep the faith here and watch this Bitcoin price action closely, especially. All right, peace, guys. Talk to you later.